So now with the interest rate upcycle that we are seeing, so what kind of impact do you see on the credit growth of bank? What is your outlook?
See, more than the credit growth of banks, the impact would be on the treasury portfolio of the banks. I think all the banks are looking at a huge mark-to-market hit in this quarter. So that is more worrying than the credit growth. As far as the credit growth is concerned, I think it is always a misconception to think that the interest rates are the only factor which decide the credit growth. Okay, there are so many other factors which go into determining the growth of credit. So interest is just one factor. So I don't see any major impact on credit growth as far as the interest rate hike is concerned, at least in the next few months. But yes, treasury portfolio, at least in the first quarter, I think it is a source of worry for the banks.
So, but don't you think with the interest rate upcycle, the private credit might be, the corporate credit might be impacted?
See, the corporate credit growth, I think it is decided more by the demand in the economy and certain other factors rather than the interest rate alone. See, historically, for instance, in the last 1.5 years, you have been seeing a very low in interest rate, right? But the low interest rates have not fueled credit growth because there was no demand in the economy. So now with the COVID hopefully coming down, we see the private consumption going up, though there are certain news reports which say that the private consumption, especially in the FMCG and all, has been hit by the inflation. But still, I think things are looking up, and I think more than the interest rate, I think it is other factors like private consumption and the demand in the economy which decide the credit offtake as far as the corporate sector is concerned.
So now with the next MPC cycle just coming up and RBI obviously hinting that they will go for another rate hike, will you be passing on this increase to the lending rate?
See, I think as far as all the banks are concerned, a certain part of the portfolio is linked to repo. For instance, if you look at our bank, UCO Bank, 37% of our portfolio is linked to repo. So wherever it is linked to repo, the hike in the repo rate is immediately passed on to the loan customers. But as far as MCLR is concerned, I think it will take time for it to be passed on because there are certain other factors other than just the repo rate which decide the MCLR as far as the banks are concerned. So the transmission would be immediate in case of repo linked loans, but in case of the MCLR loans, I think it will take some more time.
So going ahead, what do you think will be the focus of your bank? Will it be like towards retail credit more or will it be towards the other segments?
See, this year our focus is on growth. So we have been planning to open about 200 branches this year all over the country. The reason being, the last 3 years when the bank was under PCA, there was a restriction on branch expansion. So we have lost out on opening branches in areas where there's a good potential. So that will be the focus. The focus would be on credit. And if you say retail, yes. I mean, we are looking at retail, agriculture and SME. That will be the focus because nearly, I think, about 70% of our loans are in this particular area. But corporate also, we see very good proposals coming in, especially in the area of infrastructure, in the area of steel, cement and so on. So corporate also is something because see retail, if you look at it, if you're looking at growing credit, retail growth would be gradual. So a little bit of corporate would also be required for the banks to show growth in the credit portfolio. So it will be a mix of corporate and retail. I mean, but the growth, if you look at it in the long term, retail would be more than the corporate.
So my last question, what is the kind of NPA that you're looking at transferring to the NARCL in this financial year?
NARCL, I don't think we have many accounts which are to be transferred to the bad bank. Okay, so I don't see any major impact on our portfolio in terms of bringing down the NPA in terms of transfer to the bad bank. So because there are certain criteria which are to be fulfilled before a loan has to be transferred to the NARCL. So I think there are very few loans in that area. Of course, there will be a few loans, I don't have the figure with me, but the impact will not be material on the NPA portfolio of the bank.
what is your targeted NPA reduction that you're looking at in this year?
Our targeted gross NPA, we plan to bring it down to 6% this year, at the end of the year, by March. And our net NPA, we are targeting to bring it down to 2%.
And what is the current level?
Current NPA, I think it's around 7% gross and 2.79 net.
Thank you so much, sir. Thank you, sir.